Rivian has been in the headlines lately for several reasons, including a huge investment from VW Group and other important deadlines it set for itself, including approaching gross profit margin positive in the upcoming quarter. Still, the stock price has remained relatively flat year to date in 2024, trading at about $12 per share as of this recording. Of course, it's down significantly off its highs where it was trading at closer to $200 per share in 2022. Of course, during those moments, I argued that the valuation should have never been that high to begin with. Still, investors are interested in this EV manufacturer and seller, and in this video, I'm going to elaborate a little bit on what's going on inside of the company. What are their most recent developments? I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So one of the big stories with Rivian is the company's focus on cutting costs, improving the gross profit margin, because sales are not where they thought it was going to be. And the company had planned for sales to be much higher. And so their cost structure was not built for the company to be at this lower level for this long. So they're making improvements. The material cost progress they made, as well as efficiency improvements with the manufacturing plant, are important and critical for the business. Those changes and a lot of the changes that went into Gen 2 were focused on cost, right? They're trying to lower the cost per vehicle sold. They're losing a lot of money on each car that they're selling, and that's not a sustainable business model. So they're trying to improve those unit economics. They're also introducing a new variant that they're calling the Tri-Motor, and it puts a single motor in the front and two motors in the back, delivers exceptional performance. It's better than the first generation quad, but with a much lower cost in terms of what it takes to manufacture. That's also one of their plans for the upcoming quarter and next year, is to sell a mix of vehicles that are higher gross profit each vehicle. So that means they're not going to focus so much on the lower priced models. They're going to focus more on the more premium models in their array to generate better margins. While that might have the impact of decreasing the number of units sold in the fourth quarter and in 2025, each unit will be more profitable than if they were to focus on increasing the number of units sold. And this could be, just to bridge the gap for Rivian until they come out with their lower priced model. Hopefully, it's still on track for the first half of 2026. What they did is around 50% of the bill of materials by cost is with new suppliers now, or new contracts. And of course, when you do that, when you're changing that much of your supply chain, that's a big challenge, and it's risky, and it's taking away time from other efforts. And you saw the downside of that in the latest quarter. So they faced an issue with one of those newer suppliers, and that limited production substantially. And they're still trying to come back from that. They're working really hard to address that. So this task of Rivian reaching gross profit margin positive by taking all of these extreme steps to lower their cost comes with risks. It comes with big risks. It would have been better if they didn't need to do this, if the sales forecasts that they had initially thought about in 2019 and 2020 by now in 2024 would have been closer to what they were thinking, right? It's way lower than what they were thinking in terms of units sold. They were thinking that by this point, it would be easily beyond 200,000 units sold annually, and they're still at around 50,000 units sold, which doesn't even fulfill the capacity of their existing manufacturing facility. So they're still at a fraction, less than 1/4 of the capacity of the existing manufacturing facility. And when you're built with that kind of structure, it makes it very difficult to be profitable in the bottom line. In fact, if we look at the company's cash flow from operations, it was negative 876 million in the most recent quarter. Thankfully, they are making improvements. As you can see, this trend line improving here. At the worst of this situation in 2023, they lost close to $1.6 billion in a quarter in cash outflow. And they're improving this, but you can see they've still got a long way to go. Negative 876 million in cash flow from operations in the most recent quarter. Thankfully, the R2 platform is advancing, and from a timing point of view, is on track. It's going to allow them to reduce the cost of the R2 relative to the R1 in terms of content by about 45%. And they're going to try to sell these starting at $45,000 with the R2. Now, that remains to be seen if they can actually come out with the model at $45,000 or whether or not they come out with the R2 more premium version at like a $55,000 or $60,000 price point, and they announce a lower price version maybe 6 months later or a year later, right? Similar to what Lucid did with the Gravity SUV. They announced that they were going to target the $80,000 price point. But now that the orders are coming in, the initial models that are available are the $90,000 and above models, right? So that could be what Rivian aims to do there, because even with the 45% cost reduction, the latest numbers I got for Rivian in terms of the cost of goods sold per vehicle was over $110,000 per vehicle that they're making. That's how much it costs them. And so if they're going to lower that by 45%, that still leaves them a cost of goods sold at above $50,000. And so you're selling something at $45,000 that costs you more than 50, maybe closer to $60,000 to make. And so you're still not making improvements in terms of the unit economics of the business by taking this step forward. So it remains to be seen. There's a lot of moving parts here, a lot of changes that need to be made, a lot of improvements that need to be made before they can hit this target. So in order to prepare for the R2, their expansions are underway in the existing facility. That was good news that they decided to pause production in the Georgia facility. Remember, they were simultaneously constructing an expansion facility in Georgia that was going to have a capacity of over 1 million units of production, when they're not even selling 50,000 units right now. And the existing facility has capacity for over 200,000 units. So I thought it was prudent to pause production on that other facility. In fact, it would have been better to never have started production on that other facility. When you're only at a fraction of the existing facility, you're not demonstrating growth, and the industry overall forecasts were well above what reality is. So that's another misstep, but pausing it was a prudent move to do. So the expansions are underway, and they're on track for the first half of 2026 for the R2. This is the biggest upside here for Rivian, is if they launch this R2 at that lower price point and it gains meaningful traction, and the company's sales double or triple from where they are at the current point. And that's the kind of improvement they need, a double or tripling of their existing sales, because at 50,000 units, they're not going to be, it's not going to be it's not going to be a sustainable business. They need to get to somewhere around 200,000 units to at least be break even on the bottom line, and cash flow positive, and not losing all of this money on the bottom line. So it's good that they're on their way. It's good that it's on track, but there's still a lot of question marks here. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.